Well, the Federal Reserve, they've been raising interest rates 25 basis points, and they've done it again and again and again a few times now. And now they're hesitating, but only because they're planning on selling off their toxic balance sheet, which is going to have the same effect as an interest rate hike. Probably quite a considerable interest rate hike. The exact same effect it's going to have on the markets. Now, they can't do both. They can't raise interest rates and sell their toxic balance sheet unless they bring the market down, and they know it. They know there's problems. The Fed, just on August 7th, just right now, this is brand new, the Fed has just fired off a stark warning. Their warning is about stocks. The Federal Reserve is done pulling punches. It thinks that the stock market is far too expensive, oversold, in fact. And for all of you investors out there, the Fed is telling you. It wants you to take note that they're warning you. It said the Federal Reserve's done pulling punches. It thinks the stock market is too expensive. In other words, they're warning you that it's going to come down, and probably come down hard. Now, remember what I talked about in my last couple of episodes when I talked about the debt ceiling that's coming due? The 1st of September, they only got 12 days, and they've all got to come to agreement. And this particular government that's in there right now can't pass or agree on anything, especially with them fighting against Trump. They're all against Trump, and back when Obama was in office, they could come to some sort of bipartisan agreement, and they could get the debt ceiling through. But they had a hard time with Obama. I remember once there that they shut the government down, and the stock market fell like I forget exactly how far, like 1,000 points or something, because they were just barely squeezing it through in time, even with Obama. And they only got 12 days this time. See? Now here is this article by the Federal Reserve. Well, it's not by the Federal Reserve, from the Business Insider, but it's about the Federal Reserve. And in the minutes of its July meeting, the Federal Reserve, the central bank has explicitly highlighted the stretched equity valuations. In other words, the stock market is completely stretched to high valuations that it's not worth. In other words, what the Federal Reserve is actually warning you. They're warning investors that the stock market is stretched beyond belief, and it's going to come down. Basically, they're not using those exact words, but this is what it means. They're using a sharpening tone, the Fed, as compared to their previous comments. In other words, they're worried. It says, since the April assessment, vulnerabilities associated with the asset valuation pressures have edged up from notable to elevated. Okay, I'll read that again. Now, this is the Fed's words right here. And, of course, they always speak in double speak and double talk. It's hard for the layman to understand. They like to do that. It's kind of like the doctors using a dead language, to try to baffle us with BS. They use Latin, a dead language. Latin is a dead language, but they use it anyway, the doctors do, to baffle us with BS. They'll use all kinds of Latin words to describe your illness, because they're trying to baffle you with BS. Instead of just saying you got a sore elbow, they'll say you got a lymphatic melanoma or something, some sort of Latin word they'll use for sore elbow. You know what I mean? And so the Fed does the same thing. And so I'm going to read you their statement. Vulnerabilities associated with asset valuation pressures have edged up from notable to elevated. Now let's see, can I simplify this? Vulnerabilities associated with asset valuations. In other words, asset valuations is the assets in the stock market and their values are pressures would mean that it's under pressure, so it's too high, have edged up. In other words, it's even higher than too high, from notable to elevated. See, this is their terminology. So, okay, I'm going to decipher it here. You practically need to decipher it. Vulnerabilities associated with asset valuation pressures have edged up from notable to elevated. In other words, it's went from high to higher to highest, and it's ready to fall. That's what they mean in here. As asset prices remain higher, climb further, risk spreads narrowed, and expected that and actual volatility remain muted in a range of financial markets. In other words, the Fed is basically saying that it warned you about the high valuations, but prices continued to climb, and guess what? Now the situation's even worse. So he simplifies. Actually, he did a better job simplifying it than me. Why doesn't the Fed speak that way? So all of us can understand. Because they're trying to baffle us with BS. That's because they're a bunch of crooks. That's the only reason that you want to baffle somebody, so somebody wouldn't understand. And that's the doctors are the same thing. If you didn't know it. If you didn't know it already, the doctors are a bunch of crooks too. But they're the worst. I'm going to tell you. Okay, I'm going to tell you, you know, the bankers are bad. The government's bad. But the doctors are the absolute worst next to the lawyers. Well, I think they're even worse than the lawyers because they're taking advantage of sick people. You know, I mean, you're sick, you go into a hospital, and you need help, and you need care. And what do? They charge you for every cotton swab. $50 for a cotton swab. You know what I mean? Oh, it's got 1 drop of alcohol on it. That'll be another $10. You know, I mean, you can go into Walmart, and that same drop of alcohol from a bottle of rubbing alcohol is like $1.99 for a whole big quart-sized bottle. You know? They don't buy it by the quart-sized bottle, and they don't buy it from Walmart. They buy it from even cheaper distributors for the hospital. They buy 50-gallon jugs, and they get it for like $1 a gallon for the darn stuff. And then they charge you, they break it down into micro units, and then they charge you like $10 a micro unit. So a gallon, they pay $1, and they charge you $50,000 for 1 gallon by the way they do it. I mean, I'm going to stray from the subject here just a little bit. But my father takes eye drops. Little drops he puts in his eye. Most of the stuff is just sterile water, but there is an active ingredient in there. Right? They take, and they buy that active ingredient. They probably pay about $5 for enough to make 5 gallons of the stuff. They put it in, they mix it in with the sterile water. Then they break it down into those tiny little containers that you drop in your eye, and you go to the pharmacist and you buy them. $30 for one of those little squeezing things, and there's only 30 drops inside it. Now, you know what they do? It's not good enough for them to even fill that little plastic bottle this big. They only quarter fill it. And I figured out that they're getting something like $15,000 a gallon for the stuff, and it's only costing them like $5. They're crooks. And if you want to really talk about crooks, take a look at the companies like Bayer. You know? They're out there, and honest to gosh, I'm telling you, they love diabetes. Bayer Diabetes. It's almost like they would like to patent it. It's made them so much money that they'd like to patent it. They have a whole division called Bayer Diabetes. Oh, they just love diabetes. I'll tell you why. They get places like Malaysia, you know, and they get those people in the sweatshops over there making like $2 an hour, and they get them to cut these test strips up of paper. All it is litmus paper, for crying out loud, right? And they cut it into a little thin sliver about this wide, litmus paper. And it's like $2 a strip for the darn stuff. You know? And guess what they pay for the paper? The litmus paper. Guess what they pay? And they got them sweat shops working over in Malaysia, putting it into the little bottles and stuff. And it's just like a license to print money, for crying out loud. Oh, they just love it. You know? And these poor people, they can't afford it. What they have to do is they have to take it off the insurance, and then the insurance gets rich too. What a rackets, you know? So let's get back to what the Fed's saying here. I mean, okay, I shouldn't stray, but these guys are just irking me. They're irking me so bad with what the rackets that they're pulling, you know, and the graft that's going on, and how they're all raping the system. They're raping the system, and they're raping us for money. They might as well be telling us to bend over. I mean, the way they're doing it to us. And we let them get away with it. And this needs to come to a stop. So anyway, it says, later the minutes, several participants said that these extended stock prices combined with continued low interest rates had led to an easing of financial conditions. However, they were split on what that means for the market going forward. One camp argued for tighter monetary policy, saying the Fed's efforts to remove accommodation had been offset by other factors, limiting their effectiveness. Another faction said recent rises in equity prices might be part of a broader-based adjustment of asset prices to change in the longer-term financial conditions, and such increasingly expensive stocks might not provide much additional impetus to aggregate spending on goods and services. These extended valuations are also a source of worry for other market experts, like John Hussman, the president of Hussman Investment Trust. By his count, stock market valuation measures now exceed every point in history except for the one extreme reached on March 2000. Guess what? That was the dot-com bubble. Do you remember Pets R Us? And they had that little sock puppet thing. And they didn't... well, they had a lot of companies. That wasn't the only company in the tech industry back then. It was all about... There was a mystique to... the internet. Everybody thought the internet was a magical thing, and any company that was connected to the internet, any company that even said .com, you know, and had a connection to the internet was like magic, and everybody wanted to invest in it. And so you had this company running around called Pets.com, right? And everybody thought it was the greatest thing. But the actual company itself was not set up really to make money. It wasn't about making money. It was just about putting on a show to make it look like it was making money. And their stock valuations were going through the roof. Right? And they had all these commercials they were running all across America incessantly. Just every time you turn the TV on, there'd be this commercial with this most annoying puppet there ever was in the history of puppets. You know? And everybody thought the company was great and making all kinds of money, though. But it was really just a bunch of television commercials. It was like a false facade. There wasn't anything behind any of it. It wasn't really making... The company didn't really have a good market strategy or anything. There wasn't anything there. It was just all a blown-up bubble. And there was a whole string of other companies that were just like it. And their stock market valuations were going through the roof. What it reminds me of what's going on right now with an awful lot of these coins that are like Bitcoin, but they're not Bitcoin. They're these alternative currencies, but they're selling off coin offerings. They'll offer a big coin offering out there, and they'll have nothing behind any of it. It's just the prices are blowing up because the prices are going up on some of the coins that do have put in the work and the labor behind them, you know. But even the best of these coins that are in there right now, you know, it's not real solid yet. And what I mean by that is it's mostly built on speculation at this point. And the speculation does have a lot of validity behind it in these coin markets. You know, it's got a lot of validity behind it because these coins are eventually going to take over. But they're kind of like getting ahead of themselves a little bit price-wise because of the speculation at this point. And so I do expect the whole thing to fall back some. You know, and it's going to give an awful lot of people out there who are on top of this situation a chance to invest in this when it really does go up and it really does explode in the future. You know. So moving on here, what he's showing is that these price valuations in the stock market right now exceed every single point in history, except for the dot-com bubble. And we all know what happened to the dot-com bubble. So what we got coming up in September, if they cannot smooth that out, and I mean they're going to have to smooth it out and get it done, and they're going to have to all come together, and they're going to have to work 24 hours a day to get that thing in there with the debt ceiling raise the debt ceiling with no strings attached to it, a clean debt ceiling raise. You know, they're going to have to all come to agreement in just the first few days and be able to get that thing through there, and they can't agree on anything. The chance of me thinking that they're going to get it through in the first few days like that and not let it run down to the wire, in my mind, it's almost like nil. I mean, they might do it, but I can't see it happening. And I think that they're going to run this thing down to the wire, and the stock market's going to get nervous. It's going to start to fall. This is what I think is going to happen. And when it starts to fall, then all the investors out there are going to get nervous, and the whole thing just could crash because it's overvalued. It's so far overvalued, it's ready to pop anyway. And once you get it going, then fear sets in investors, and the next thing you know, they're all running for the door. You know? So these price valuations in these stocks are just horrible. He went on further to explain. He said that he split the S&P 500 into deciles based on price-revenue ratio stocks, except for the richest portion, which is still the most extended since the tech bubble. Every decile is currently at or within 2% of the most extreme historical valuations, Hussman's data shows. But amid all the warnings, Hussman and a handful of Fed officers are sounding. Some within the central bank think lofty stock prices are justified. So some of them in there are in disagreement that the stocks are too high, you know. But that's going to happen with academics because some of them can't ever agree on anything, you know. So they went on toward the end of the article here, and they said, so the Fed, like the general investment public, is divided. Like I say, some of them are academics, and they can't see it if it's right in front of their nose, you know. So that's what's going to happen with the stock market. What I think is going to happen with the stock market is I think she's getting ready for a fall. And if you're smart, I don't think that you're going to go out there and be buying a lot of stocks right now, you know. There's better things you can do with your money. In my estimation, I think that one of the things right now that is the most unloved, you know, and that's when you want to buy something. Now, you see, all these cryptos right now, they've had a lot of loving. You know, Bitcoin has just been loved to death. It's all the way up there. It's almost like the stocks. It's been pumped up. You know, a lot of love, right? But one of the things that hasn't been loved in a long time is silver. Silver is way down there, and it's just not far above mining production cost. You know, I think that silver is going to get shown some love pretty soon. In the next couple of years, it's going to be showing a lot of love. And you know, the funny thing is about human nature, when something's not loved and something's cheap, nobody wants it. But when it's way up to the moon, everybody wants it. You know, when it's ready to fall, that's when everybody wants it, because it's a winner then, and that's when they want it. But when it's way down and nobody wants it and it's unloved and it's a loser, they just want to kick dirt on its face, you know. So, anyway, you guys have a good night, and we'll see you tomorrow with some new stories. Bye-bye for now.